Hello, everybody. It feels like it's been forever since I've gone live, so I'm actually kind of nervous. I said to the girls here I didn't even want to do it. But I get lots of DMs after I do my lives, and I keep coming back because I know, I hope that they're useful for you guys, or bring you some valuable information, or maybe just remind you that the situation that you might be in, that you're not alone, that there's lots of people that might be going through the exact same thing as you. So today I'm here to talk about that nasty 4-letter word that we call debt. Nobody wants to talk about it. It's shameful. Nobody, it's like sex. Nobody wants to talk about sex. It's embarrassing. It's shameful. Similar to debt, you're either having too much or not enough, and nobody wants to talk about it. And I'm here to tell you that it's okay. And here at the Place to Mortgage, we have lots of strategies to help you get out of debt by, maybe refinancing, or do a debt consolidation, or all of those sorts of things. And I talk to clients, I'm not even joking you, probably on average 2 clients a day, in situations where they just feel like they can't breathe anymore, and the world is collapsing in on them, and they just need help. And I would say sometimes there's not a lot we can do, and sometimes we just have to set a plan in place to get them where they need to go. But I would say most often there is something we can do, and certainly on those phone calls and in those situations, my heart just bursts with pride that, we're really able to make, a difference for people. So I just want you to know that if you're feeling, tight every month or something like that, just give me a call and we'll run your numbers. One thing that you might not know about me, maybe you do if you follow the account for a while, is that I'm super nerdy, and I have a built-in analytical system that I have built in over the years that that I will enter in all of the numbers through and determine if a refinance or a debt consolidation financially makes sense. So for some people, they'll come to us for different reasons. They might come to us and be like, what, Sarah, we've got no trouble making our payments, but there's got to be a better way, or there's got to be something more that a better solution for how we can pay that off quicker, pay less interest over time. And so, that's where my nerdy spreadsheet analyst system comes in really great, because we could literally put it in there and it's black and white, and I can say to the client, what, this doesn't make sense. If you're not, struggling, you are on the right path. Or I can say, no, it does make sense to make these changes, redo your mortgage or whatever that might be. I've got some clients that it's a band-aid solution for right now, and we're okay with that. The final end result might not be overall beneficial to them, but sometimes just that ability to be able to breathe at the end of the day and relax and not be stressed out on a day-to-day basis makes that okay. And so everybody's situation when it comes to debt and the need to reorganize the debt or consolidate's kind of a nasty word. I think I hate saying that more than debt. So let's say reorganize the debt or do a refinance. Everybody's needs are different. I have a couple of examples of ones that I'm just wrapping up right now. And I had a client, they came to me, they had a mortgage of about just over $390,000, and their interest rate was good, 2.99%. So they had a great interest rate. Their mortgage was down to 22 years. They were paying biweekly, about $930 biweekly, but they also had a vehicle loan and some outstanding credit debt. So overall, their current monthly payments with that was about $36.93 a month. We were able to refinance them. Now, these clients came to me and they said, we really don't want to increase the number of years on my mortgage, on their mortgage. And I said, totally, I get that. I understand that, the dream, everybody wants to eventually have their mortgage paid off. I get that. And so when they came, they said, we really, really want to keep it at 22 years. What we ended up doing, however, because they had some other debt that we couldn't consolidate into the loan, just over about $50,000, And so what we were able to do is we did the refinance. We consolidated some credit card debt, the vehicle loan, and the mortgage all into one. So with those three debts, they were paying $36.93 a month, and we were able to combine all of that. I did convince them to increase their amortization, which usually I would not, but for this one, I will tell you my reasons why. So we did increase their amortization back up to 30 years, and it made their monthly payment $17.75 a month. What this meant then is they had about over $1,900 in freed up monthly cash. Now they're not necessarily feeling tight on a month-to-month basis. So, I said to them, if you're not really feeling tight, let's make a plan in place. And so we're going to take $1,500 of that additional $1,900 that they're saving now every month, and they are going to apply that every month. They're going to put $1,500 onto the other debt that we couldn't include in the refinance. In 3 years, that's going to put them consumer debt free, and then they're going to continue paying that additional $1,500 for the last 2 years of their mortgage. By the time their mortgage comes up for renewal, their amortization will be down to 18 years. So that's just showing you some strategies on, because, at first it seems like a hit in the gut that they might be increasing their amortization back up to 30 years. But if the plan goes as is and they stay diligent in what their goal is to become debt free and then eventually pay off their mortgage, at the end of 5 years, they're going to be in a significant better scenario than they were before. We had worked out the math on that and taking into consideration the balance on their mortgage in 5 years and the fact that they've paid out their debt. We are actually saving them, I think it was over $51,000 in 5 years. That is huge. That's $10,000 a year. That is almost $1,000 a month that these clients are literally rolling up and throwing into the fire right now, that we are actually hardcore saving them after we ran that through the analysis. So it just kind of goes to show you that, even though you might think initially it doesn't make sense or there's no way that, that it can, it certainly does for them. Another example that I did that I'm working on right now is I have clients and they've got a hefty mortgage. It's over 1.2 million and it's at 3.94% though. And they only got their mortgage last year and they just happened to get it right when it was the interest rates were at that top, and interest rates have come down significantly. So they called me. Their monthly payment is over $7,000 a month, and they called me up and he just said, Sarah, we're finding this tight. Like, is there any way? He said, I know we just did this loan with you last year, but I just wanted to reach out. And I love these calls because I love when clients feel that they can trust me and that they can, it's okay to talk about debt. It's okay. So it just fills my heart that I have that level of trust with people. And he said, we're feeling tight every month, and I don't think there's anything we can do because we just got this mortgage last year, but I just wanted to check with you. And I said to him, truthfully, there's probably nothing we can do. I said, the balance of your loan, I said, your penalty, when I worked out the math, was almost $30,000. I said, there is no way, I don't think that I'm going to be able to justify through my nerdy analytical system that a $30,000 penalty makes sense to you. Sorry, my other phone's ringing. And so I said, but I'll run the math and I'll let you know. And so basically his only goal was to decrease the monthly payment. They didn't have debt they needed to consolidate, nothing like that. So I ran the math, and if we added that $30,000 penalty back onto the mortgage, I was able to reduce his monthly payments to, I think they were $5,600, $5,400. Yeah, $5,400. So we were able to reduce the payments by $1,600 a month. His interest rate dropped because our newest rates are quite a bit lower. So his interest rate now is 3.04. And at the end of 5 years, yes, he will owe $61,000 more on his actual mortgage. However, in that 5 year span, he'll have saved $76,000 in payments. So, even to my surprise, in this scenario, for this client, at the end of 5 years, he's still ahead of the game by $14,500. So it just goes to show you, like, that scenario, even I thought, at first glance, I was like, there's no way this can financially make sense. I have a hard time putting anybody in a mortgage, and certainly in a refinance scenario, if I can't see the long-term gain in it. And but it just goes to show you that it's one simple phone call. If you feel like there's something that we can do, if you're feeling tight, on a month-to-month basis, or if you're just feeling like, hey, I've got a little bit more debt than I feel comfortable about, and is there a better way that I can be paying this off? I would love to chat with you. A couple of things, little details about refinancing. So the government, our lovely government, has some guidelines in place. So the one being, we can't look at refinancing a mortgage if you have less than 20% equity in the property. So meaning if you have a home for $500,000, your mortgage can't already be higher than $400,000. Our lovely government just doesn't allow us to refinance it until you've built up that equity. So sometimes when clients call us, that's the only reason we can't help them out. We can still try to help you out with getting you an unsecured debt consolidation or something like that. It's just not quite as magical as it is when we can use the power of the lower interest rates in a mortgage. So that's a few details to know, but honestly, just call me. We'll start by having a quick conversation over the phone. You'll let me know a few details about your mortgage, your current debt situation. I can run an analysis and let you know, and I will be the first one to say, hey, that doesn't make sense. Like, you are in the best possible scenario. But like, literally, I've had these phone calls turn into be $14,500 over 5 years and $51,000 over a span of 5 years. And literally, like, I've had people crying in my office or messaging me afterwards, after it's all said and done, saying like, I can't believe this, like, the numbers actually work, and you just have done magical things, or like, it's so honoring to know that, that you can affect people's lives like that. And this stuff we don't learn in school. This stuff you're not supposed to know about. You don't learn how to manage debt or ascertain what interest rate is best to pay off first, or how to amortize loans and that sort of thing. So don't feel like you're doing it alone. You can call me. I'll walk you through it. We'll determine the situation, and we'll help you move forward. There's lots of things I can't do, and I might be calling you for help or a service with. But one thing I can do really well is mortgages and ascertain debt scenarios, and try to help figure out if it makes sense to save you money with nerdy spreadsheets. And I'm more than happy to help you out. So give me a call. I hope you have a fabulous Wednesday. And my number is 403-307-2002. Talk to you soon. I don't ever know how to end this thing. Sorry, guys.